Has the market changed its mind about what the Fed may do next?
We have got to get inflation behind us. I wish there were a painless way to do that. There isn't.
Think of that number, and maybe more importantly, what do you think the Fed's going to do, and therefore what your equity is going to do?
I've been saying over and over again to my colleagues here that he wants your portfolio down so that you won't be able to spend as much.
Good morning and welcome to Financial Stockholm. I'm Christopher Chrystal, and today we have with us André Havas from CIMalgo. This is an AI fintech company which helps investors with their portfolios in a professional setting. And so with us is André Havas. Great to see you, André. Thank you. And we'll let you go ahead and introduce yourself, the company, however the process is you want to follow. Please let us know all about CIMalgo. Thank you, André.
Thank you very much, Chris. I'm happy to be on the show. For people who don't know CIMalgo, we are a Swedish-based fintech company. We provide decision-making tools for professional investors. All of our tools are web-based and delivered on a license fee basis, i.e. that means no installation, no integration. What we have done also for the facilitation of our clients is that we have integrated large data sets, a lot of functionality, and this is all purpose for the professional investor to make insightful decisions, to be able to select from criteria-based filters in order to define a universe that can subsequently propagate to a portfolio of assets, which is customized, constrained, or very personalized.
Okay, short and sweet. Thank you very much. So it's a B2B platform, and therefore the product is geared towards institutions. But then how would the individual participate in this? If you could tell us about that.
Sure, that's a very good question, Chris. How can the individual participate in our platform? So just to give you a visionary aspect, that would be that in the future, I would probably see that every individual would have access to a platform like this. Today, I think what we can allow for the individual is to partake in the platform by reaching out to somebody that has access to the platform. So a financial advisor, a discretionary asset manager who has access to our platform would be able to make very informed decisions, would be able to work in a seamless workflow, and also be able to have the logic and processes at hand in order to iterate an investment idea that can be based for the future or just a reflection of the current circumstances in the market. But at the end of the day, everything is there at the point of your fingertips.
Okay, so all the power of the Morningstar with the functions of the Bloomberg, all there for the advisor to give to the client, and at a cheaper cost. So, well, I mean, that's fantastic. So when we look at that on an institutional basis, most of these portfolios are constructed for large amounts, large volumes, and can even be market-changing events when they change a position. So the individual investor, whatever level they're starting at, and then they're going to their advisor, how are they able to take advantage of the factors they want to incorporate, the diversification? How does this translate through to that smaller investor or smaller portfolio?
Sure. I will give you an example, but before I do, I would like to give you the three modules that we work from in the platform. So one is asset selection. So that's the first step in your investment process. Which assets are you supposed to select for the purpose of your portfolio? Next is asset allocation. How should you allocate those assets? And that is a function of constraints, requirements, personal objectives. And then subsequently, you want to make an analysis of that portfolio from a simulation perspective and also put it into the context of a future scenario. So that is what we offer. But what I think is very important is the first step before you come to the more mathematical abstractions, and that would be the asset selection. So I'm going to share my screen with you, Chris, and I will show you how that could look like. So, for example, in the platform, uploaded 18,000 global equities. So if I want to define a universe for myself, I can easily go to the criteria and filter section, and there I can just pick whatever filters I want to attribute to my asset selection. So today, for example, ESGR and SFDR data is very important. So for example, I can just do a click on carbon footprint. I can go for data on board gender diversity, for example. So if I want to make a portfolio which begins by just defining a universe based on gender diversity on a board, and then also carbon footprint, I can easily do so. And the more granular you want to be, the more filters you add. And just after a couple of clicks, you will find yourself in a universe that is very, very relevant for you, but also sustained by financial data, company data, and quantitative data that subsequently will be very important also for the composition of your portfolio.
Okay, that's fantastic. That's a very strong tool. So thinking of that and the selection for the filter leads you maybe into different bias that you can encounter. And in typical, you want to avoid the bias. You want to work off of numbers. And so the CIMalgo product, how do you do this so these portfolios are profiting from the facts?
Sure, that's another great question, Chris. In order to avoid biases, we have integrated the asset allocation framework by Robert Litterman. And for people who are not familiar with Robert Litterman, he was the brain behind the Goldman Sachs asset allocation framework, which was developed in that particular firm during the 90s. And basically what we give the allocation, the asset allocator, but also the advisor or wealth manager is the, if you like, the ropes they need to hang themselves with. It might sound a little bit harsh, but it's not as dramatic as that. But basically what you can put your portfolio in from a contextual point of view is one where you can gauge your absolute returns, your implied returns, and your market equilibrium returns. And your implied returns are reflective of how you as an individual have viewed the market. So that is often very different from how the market has priced the same portfolio from a relative perspective, and also if you take into account mean variance and market capitalization. So there you will have a very nice gauge which will allow you to think once, twice, or even 3 times about how you want to size your portfolio relative to what you have seen and relative to how your first initial portfolio has fared in a historical perspective, but also you can optimize it for a future integration in a portfolio.
Okay, excellent. So you really are providing as many of the facts as possible, and as facts are used, the numbers, the facts will make sense, and so then the more facts you have, the more sense you can make for your portfolio.
That's absolutely true, and the more facts you have, the more personalized and customized your portfolio can be. But you can also single out the wheat from the chaff. So it makes also, it allows for the user of the tool to define a universe based on facts, which then can also be subject to an assumption about the future. So if you believe that facts would remain constant, so be it. But if you want to change those facts based on your assumptions, that's where you can use the modules that we have built for the purpose of optimization, for constraints implementation, and then, as I pointed out, put it in a context of implied and market equilibrium views, which will allow you to have a multi-surface rendition of the way you view the world today based on the facts that are readily available.
Okay, excellent. Very nice. Thank you very much, Andre. This has been an excellent presentation, or at least for me, and eye-opening to learn more about CIMalgo and how you're creating these portfolios, or how the investors can benefit from this. And would there be anything else we should add before we let you go with your busy day?
Sure. First of all, thank you very much, Chris, for letting me participate on your show. But also the key takeaway, and also one of the ideas behind the tool, is that the world is very fast moving. And I think that if you can add productivity and some sort of a industrial thinking to the way you manage portfolios, it will also allow for a better business and a better implementation, but also the simulation of a variety of scenarios. If you can make them in a seamless, logical interface, it gives you a very nice tool where you can actually customize portfolios for a variety of purposes and durations, which you would probably not find if you just allocate between standardized products.
Excellent. Thank you for the final point, Andre. And we're going to wish you a lot of success and continued great day. We'll talk to you soon, Andre. Thank you.
Thank you. Bye.